Okay, if you're on YouTube, also give me a sound check. Okay, hang on. I'm not hearing. Can someone say something on the Zoom meeting? Just want to see if I can hear you. All right, I'm not hearing anything. Bear with me a second. Try again.
Hi, Bob.
All right, there we go.
Yes.
Hey,
Awesome.
Bob. Very good.
Crazy stuff out there, huh, folks?
I was waiting for you to come out earlier.
Yeah, I was on an important call, and I just couldn't even focus anymore. I had to tell folks. I told this guy, I got to get off this meeting. I can't do this. I'm watching these screens and everything going on. So
I think it's the news which came out. Like they were piling up. As like Chris, like he's here right now. He might say a bit more because he have this news system which he was looking through. But like from what we noticed, there were like a bunch of bad news coming out.
Yeah, it was one after the other, this whole cycle, basically from like college football being pushed off, updates on coronavirus, a rocket attack on a U.S. embassy in Baghdad, and then you had the stimulus talk.
Stimulus. I think the most of the Bob Kendall came at the stimulus when the stimulus came.
yeah.
Yeah, McConnell was asked about the stimulus talks, and he said they're at a stalemate, and that's when things really started pushing.
Yeah, I'm sure it did. Yeah, yeah. I've been trying to actually have a. I've got a bunch of stuff going on. I was trying to work on today. So yeah, interesting. Yeah, that makes sense actually, and then it just, like you said, it was just piling up and.
Piling up. There was also a statement from the Fed about the economic downturn. Just a bunch of just layered on top of each other and then snapped.
I think the market is not even reacting to coronavirus news anymore as bad as it reacts to stimulus. That's kind of, I think, what is signaling the bubble, because I mean, if the market is only going to move up on the new money being put in, it's not such a great move up.
Yeah, yeah. Yeah, and we also got it right up, like I talked about what we wanted to watch a couple of videos ago. I talked about that the thing that we want to watch for is the reaction at this high. And, you know, they just piled it, like whoever was that was talking, I think it was Chris, they just piled it on big time.
Yeah. we were actually all talking, and I was going through the timeline. I was like, oh, guys, here's what's happening. Just an FYI to everybody, Joe Biden selects Kamala Harris for VP.
Yeah. Yeah, and then you got mail-in ballots going on, so.
Yeah, that'll be fun.
Oh yeah, well.
Unbelievable.
Yeah, and if Kamala's your new president, we get lots of things to talk about in the United States of America.
Big time.
Yeah, absolutely.
Well, do you expect a lot of sell signals to come up of dailies today?
No, not a chance. No, this a little pimple on a butt. You know, I'm trying. No, this is nothing big. It feels bigger than it is. The news feels bigger than it is, and that's a lot of what happens around these type of events, and it may become more material. Futures started trading, and we'll see how they trade. It's on the screen. You guys can see this stuff. So we'll chat a few more minutes. I'm going to take about a 3-minute break, and then we'll kick off the meeting. Just preliminary thoughts on the WaveTech stuff, and we'll circle back after a while. But the futures are rallying here. You can see them on the screen. There's a little bit of buying coming in. So, yeah, I think a lot of this stuff, like Chris was talking about, everything that has stacked up on the, in the news, just kind of weighed on the market, and everybody's always nervous, and I think we probably saw some of the algorithms kick in and stuff like that. But we're getting an uptick here in the futures, so that's somewhat convenient to.
Is this robots trading, or this is like who trades in this time period, like after the market close? Like the investment bankers, like the top investment banks, like are they allowed to trade in the off hours, or like?
Oh, sure, yeah. It wouldn't be investment banks, but mutual funds, ETF guys. A lot of the activity that we saw in the close today had everything to do with. It had everything to do with the whatever orders were pending out there that folks had put in for mutual funds or squaring up of ETFs. That whole last 10 minutes of trade every day is really an institutional trade. It always has been for as long as I can remember. And so the close ends up to be pretty important. There's usually there's a reason why, and we'll kind of break in just for a minute when we talk about where WaveTech actually enters the market. It doesn't enter on the close. It makes a decision based upon the close, but enters on the next open. And a lot of times you'll see a fair amount of change in the prices between today's close and tomorrow's opening. And like I said, we got a slight bid, 4 or 5 handles in here. So it'll be interesting to see how this thing trades overnight and see the things that list that Chris was talking about that just piled on. It's just like one story after another, and the fact that they've decided not to have college football, which is like I'm a huge fan. I mean, I love college football.
This news was circulating from the morning. I like on the morning calls at 8 and 9, the people were already talking that it's not started. So like it was out earlier. But the thing that I wanted you to note, Bob, and I'm sure you will see it yourself when you do the review, but the RXT on ES was hit by the penny, like at 3,319 it was RXT today, and it hit it by the penny and started to move back up.
Huh? Yeah.
It is great.
Yeah. Yeah. It's the good news about the markets and all this stuff. It's really interesting because I talked about this maybe over the last couple of weeks on the videos, is that we've seen a lot of normalization. We've seen volume ranges. We actually got down, I think the lowest that I saw this 3-day volatility that I watched get down to was about 18 handles, which compared to the days when we were getting 120 handles on the S&P and 1,200 points on the Dow Jones those days, and compressing all the way down. And normal in the old days was about normal in the old days were probably about 14 handles on average a day, and when that indicator would drop below 10, it would always tell us there's some risk. And we got down, and it usually happens within 3 days. It used to print like literally like 9.98, and within 2 days the market would roll over. So there's as far as the trends go, not a thing changed today. Okay. And
one thing that really scared me is that 40 pips move in the last hour. Haven't seen that since like March.
yeah, we're talking about 15 handles on the S&P and from the high. This is not. I don't.
It felt bigger than it really was.
That's what I'm trying to say here. Thank you, Chris.
Yeah, it was so sharp, and
Yeah,
we haven't really had a pullback like that. You forget what it feels like.
That's absolutely right, and that's what I was saying when I lit up the screen around right before the close today. Is you don't want to make analysis and make decisions right now because you still have that taste of that emotion, and I've seen some amazing things. I used to work with a guy that I used to work with a hedge fund in San Francisco, and we traded on the floor in the Pacific Options Exchange, and the biggest trader on the floor. I've never seen. I learned so much from this guy. He actually used to be original partner in this business that I started way back in '98, and this guy he'd get all the emotions, and somehow by the time we got up in the elevator, we had to go from the floor. The trading floor was on the second floor, and we had to go to the sixth floor where our office was. There's about 300 guys, about 100, actually about 220 people that were traders that all traded with the firm. He owned actually the clearing firm, and by the time we walked out of the elevator, he was all emotional, and he could turn that emotion off. And he walked into the office like, "Hi, hey, how's everything going?" Like the market did nothing. And I remember this one day. It was a crazy day, and it's hard to be able to turn the emotion off. And that's what I'm going to do. We're going to get in talking about the WaveTech tool, how it's going to help all this out. But as far as trends go, nothing changed today. It really didn't. I don't see it now. There may be some change over the next several days, and we may enter into some sideways. There's a lot of upward momentum right now to bleed off, and that's something that happened. Now we did see the metals come apart, so that was crazy. They went about $50. Gold went about $50. I saw 1978 coming on gold, I thought, this week, but I didn't see what happened coming. Everybody. These markets are just so emotional. So let's talk for a minute. I'm going to take just a 2-minute break, and then I'll come back. And what we're going to do today is what I want to talk about. And this is actually it's very timely that we talk about this topic today. And I'm going to actually go in and really talk about the models, some of the thought process behind how the models work. I want to also go into the allocation models and all the importance of that. So we're going to go into more technical stuff today. I typically will go through some details. If you would, on both timelines, if you would, is let me know if how many people are new to WaveTech that you subscribed and need to know some things. And actually, if you just have some interest, you've been following, let me know. We'll spend a few minutes just go through some high-level basics, but then I want to go through the modeling techniques and some of those things. And like we were just talking about in this open mic situation, is that a lot of times it's super easy to get involved in, get involved in the emotion of the markets, and this day felt huge, right? And we've seen we just, and that, I think the other thing is that we just haven't felt any reaction at all. It's just, what was it last week? Every day was up. There wasn't even a down day. So it's interesting. Today, I believe, was the 8th day, and I almost mentioned this in the videos that between day 8 and 9, as we were approaching this high, that we'll usually get a reaction. There'll be a 3 to 5 day reaction. So I'll cover this in the video tonight. But today I want to really focus on, there's a number of things that I want to focus on as far as WaveTech goes, is really breaking down the models and those kind of things and all that. So, all right, I'm just looking at some questions here. Yeah, let me know. Like I said, we're going to take a break, and if you just let me know that you're new to the platform, so I can. There's a couple things I'll do. I'll set up some screens, and we'll definitely dig into some stuff. I'm actually bringing in I'm going to bring WaveTech on the screen here in just a minute, and then we'll take a quick break. There's a lot going on here today for sure, and we definitely want to be able to cover that. Yeah, we've got a lot of folks joining the Zoom meeting yet. At least the market participation is getting us up on our Zoom meeting. Let's see here. All right, I'll bring it in.
I noticed in today's video that we're using the same organizers tool. What a great organizer it is, yeah?
Which is that?
I noticed today on today's video when you brought this page out that you also using the tool organizer.
Yeah.
I'm also a big fan of them. So just to let you know.
Awesome. Yeah. Yeah. So, so give me 2 minutes and I'll be back on, and I'll go through some of these things. One of the things I'm not seeing, and I found it last time, I'm trying to get to the, here we go. I swear when it comes to Zoom, I'm amateur on this thing. I'm trying to find there. Last time there was, oh, there it goes. Okay, I figured it out. I think. No. I can't see the chat line on Zoom, and I was able to see it last time.
You click the chat icon and you don't see it on the right side?
No. That's what I'm looking at. I don't even. I don't.
You
even
don't see the chat
Pop down
icon,
on
right?
on a different screen of yours.
That's what I'm thinking.
Yeah,
you might have
I
to
don't
be
even
tagged.
see a chat. That's what's weird, and I don't
So-
even see a chat icon.
For us, we see at the bottom participants
center
chat,
one.
share screen.
To the left of share screen.
Yeah.
You might have a slightly different control panel. As the
Yeah, I
organizer,
don't know what's.
but-
Hang on.
Anyone been an organizer can help them. I'm wondering if it's different for the organizer versus participant.
I would. Here it is. I found it. Okay, it's on a
Cool.
different panel completely. I think. I've got chat.
Bob, you want to hit the control button for the chat. So we've disconnected it from your display screen.
Yeah, that's what it looks like here. Okay. Really weird. Okay. Okay, well, I'm not going to worry about it. I think Jay's around. He's on the meeting, so he'll just have to be till I figure this out, and we'll take a break.
Yeah, I'm usually doing that. I'm here, but I've been already answering questions.
Okay, good. Yeah, I just kind of wanted to see what's going on. So do we have a lot of newbies on today?
Yes, we do.
Okay,
Yes.
awesome. All right, well, we're going to take a minute and a half break. I'm actually bringing some things up on the, and I know, and I said this before, and I know Michael, Ram, Mo, I can think of a whole bunch of folks. I'm not sure who all hits that list, but I am going to we're going to do a special advanced meeting just so that the new folks can get what they need to get, and you folks that are well beyond all that stuff can get what you need as well. And that's going to be important, I think, going forward, because trying to do everybody in one group isn't going to work at all. And we're trying to work on a couple things here, and get the PX platform out and running as well. So, which is Portfolio Expert. And yeah, I've got a bunch of stuff I'm starting because of the little live stream. I didn't have enough time to prep. I guess I better watch a YouTube video on how to use Zoom.
Yeah. Watch a Zoom meeting on how to use Zoom, right?
Yeah, watch a Zoom meeting on how to exactly.
I'm right there with you.
All right, folks. 1 minute. I'll be right back.
I guess I can talk for a little bit. So listening to crickets chirp. How's everyone doing out there? You can chime in, say hi real quick.
Doing well, Jay. Thanks. This is Ram.
Hey, doing well.
Hey, Raphael, there you go. How you doing? Chris?
Doing good, man. Doing good.
Ram?
Wow.
There you
I'm
go.
doing good. Markets are not.
No, not them, right? Yeah, Raphael, I sent you some emails earlier. I tried to answer
Yeah.
some of your questions.
Yeah, I saw them. I haven't had any time to dig into them. I will tonight, and then I'll just keep digging then.
Okay, no problem. And I was going to give you a call, but I had put together pretty decent emails. I'm like, let me send that right now, so it gives you something to work with, and then I will, help you out with that further. Cool.
Hey, thanks, man. Thanks.
Oh.
I appreciate the help.
No problem. Always trying to help.
How are you doing, Jay?
I'm doing pretty good. How's it going?
Good. Not bad. That's as well as possible. Do you live in LA, by the way? I think I heard Bob's mention that. Is that right?
Phoenix. We're in the Phoenix area.
Phoenix, okay.
Yeah. Been to LA many times, but yeah, I'm happy to be in Phoenix.
Yeah. Nice.
Well, we did during the 80s and mid 90s, we did live in the San Francisco Bay Area. So
I remember Bob mentioning that.
Yeah. And it's not the same anymore, but it was fun back in the day, in our opinions.
How is it in Phoenix right now? Is it pretty like humid and hot? Or?
Oh, well, you got like 8% humidity. It's about 110 right now, I think. But yeah, we've been waiting for monsoons. They really haven't hit the valley too much, but yeah, it's 110 right now and very low humidity.
Nice.
Yeah.
I'm trying to get up here.
Oh, I am back. I'm gonna,
21%.
Everybody thought I'm going to pop this. Hang on. Pop the beer. No.
Oh, there's the beer.
I'll join you.
It's not a beer. I should do an advertisement. Let me just see something here.
And real quick, I want to say hi to Elaine. I saw that you got your mic open. Hey, Elaine, how you doing?
I'm fine, thanks. Can I ask a question, please?
Absolutely.
When I go into research and then do a daily search, under the market overview section on the left-hand side, I'm getting a buy signal on conglomerates. But then when I go into conglomerates, there's nothing showing up as a buy. There is no new buy signal. So I don't know why that's happening.
Yeah, so Jay, you want to handle that? Why don't you handle it? So a lot of times if there's a buy on a Friday and you come in on Monday, it won't fill in until Tuesday morning. And I'm looking at it here. It shows that it's got a buy on conglomerates. Yeah. It's got the plus sign. So what will happen is you'll see the dollar sign, which is the new buy. And then it will show that. So was that on a daily basis, or do you know?
That was on the daily search.
Okay.
Yeah.
All right. Yeah. So here's the dollar sign, right?
Yeah.
It hasn't filled it yet because today hasn't happened.
Okay.
It's happened. So when we get our data from our vendor here in a couple hours, it will fill in, and then tomorrow when you come in, it assumes when it tells you to buy that if this isn't a tradable index, right? But if it was a symbol, it's going to say, hey, buy it. I got a buy signal. The buy signal is for the next open.
Okay, that's great.
Okay, so when you come in,
lovely.
it'll fill in tomorrow as soon as we get.
Okay, that's great. Thank you.
Yeah, and that's actually a good point, and we'll get going from there. I'm just wondering. I was going to show you what I popped. It's actually called a Runa. It's a special tea, and it's got like 150 megs of caffeine. So it's different than a coffee caffeine. It doesn't give you the jitters, but it's RUNA. We'll do a commercial for Runa. This stuff is absolutely. Jay could tell you I'm always on a. I used to be a Rockstar fan. I'm always an energy drink.
I was going to mention you were a Rockstar fiend. I'm the Monster fiend, and you're the Rockstar fiend.
Yeah. So, but this Runa stuff is amazing. Anyway, get it on Amazon, of course. All right. So let's dig into a couple things here, and we're going to go back and forth. Well, I forgot we've got some newbies, and I want to bring up. Actually, I'm going to go through just a quick walkthrough on something here that will help folks out. And I'm just going to bring up. I go through this same screen every time, but I'll just want to bring up exactly what's going on. So typically, our navigation and menus are pretty basic, I guess. Well, I think they're easy to understand, and sometimes they're not as intuitive. This is an old design product, and sometimes I get some stuff and people suggesting changes and stuff like that, and it's just not going to change. What we are going to change is we are planning on we're planning on rebuilding the entire platform for a retail basis, and we also have another product, a higher end product that's coming out as well. But the menu itself goes through different areas. So there's research, the retail. There's virtual portfolio manager, which is the portfolio manager, and then you can build watch list. And I've got here, it's interesting, I did the snapshot. You're not going to have an administration button. That was a bad snapshot. That's only for admins. You won't have that button. But all these other things, once you click on research, this next level will fill in. And that it's pretty straightforward. So we'll go just kind of walk through a very quick walkthrough, and then we're going to go into some things to understand. So inside of the portfolio manager, once you click on that, there's a step-by-step process you can go through. The WaveTech is a modeling tool. It's not a tracking tool, and that's something we need to point out. There's no way that you can put your actual positions in that you do, but you match the positions based on what we tell you to do, and that's what your brokerage firm, your custodian, whatever you want to call it, that's what they do as far as that stuff goes. And then you can do back testing, and I'm going to show you a trick that I did with the airline trade last night, which will be interesting to take a look at after today's action. But then this goes through Portfolio Wizard, and I'm going to show you this stuff. So these things here, as far as using the Portfolio Wizard, it literally asks you questions, and there's stuff you can read on the screen, and RS is read screen, and you can usually answer your own questions as you go through it. And then we're not going to do a lot of this stuff today, but we will talk about. I'm going to focus today on research, understanding the two different models and the increments, which are daily and weekly on the platform, and we'll also touch on some of this stuff that I brought up next, which is the ER rating, which stands for effectiveness rating, and those are important to understand. It tells you how well the model that we're using is actually working, and then duration ratings is what percentage of the trade that we've generated has already been realized, and then The last thing is picking the right constituents, and that's one of the things I am going to go through today as far as that goes. And that I'm just going to end that right there, and we'll go back to the product here. So when you're coming in, this is what I want to show you, that just on the menu, when you click on research, it'll show you a universe chart. It's going to show you the breakdown of what's going on with each one of these basic materials and different sectors. And then you can actually click on the left and click basic materials, and it will bring up the subgroups: chemical manufacturing, forestry, gold, silver, all of these things will show up. And there's two things on research to understand. Is one is the weekly, which is the longer term models. You'll notice that like here on chemical manufacture says 50 of 238. The 238, everything is mapped out in our database, tells you what the expectation for holding is. I'll break some of that down as we go through that, just for the folks that are new to the platform. And to be honest with you, if you watch, it's really helpful if you get through the videos here. I'm just going to go over to we go to Portfolio Expert. If you haven't watched these videos, if you go over here on the support and go to WaveTech Training videos, I think there's only 4 videos right now. You just hit Start Course, and it actually will start these things. But there are several. You can just go through the sequence of videos there, and you'll be able to watch these. Or you can come down here below and click on it's Introduction to WaveTech, Understanding Homepage, Individual Symbols, and then Building WaveTech Portfolios. I believe this one is like, I want to say it's 38. Here's the playlist here. It's 34 minutes and 48 seconds. So it's a long one, goes through a lot of detail. But if you get through this stuff, it's going to make it a lot easier for, at least when we're trying to help you, if Jay's reaching out to you or whatever we're doing, to be able to get you in context to understand what's going on there as far as all that stuff goes. Okay? So and what we're going to do today is we're going to talk about the modeling process, the decision process that's being delivered to you. I saw some comments on, I just want to see if, maybe this person's on the YouTube channel, just taking a look here. But there were some questions that actually will come up a lot, and this system and this platform, it is a black box. So you don't, and that's what I'm gonna open the black box a little bit today is my plan. I thought about what am I gonna do? We do these meetings every week. So what is it am I gonna do? Well, let's open up the box a little bit so you can see some of the decision process. But one of the things that we supply, and those of you who used the product for a while know this, is if we put up, if we bring up a symbol, we'll pick on Apple here. If we bring up a symbol, once you put the symbol in this little box here, you still have, this is not Apple, you have to click on the Apple. And there's always been an extra step there. But this is Apple stock. You can see the trade that came on was on 420. It's an intermediate trade. It's up, bought at 277, current price 450. That's not today's closing price, but it was yesterday's. It's up 62%. And I think Apple was down 2.5 or something today, so now it's only up 60%. And sorry about that. The platform is going to give you the ideas, and what we're doing here is giving you transparency. So you see the chart, you can see the buy and sell locations there. The next thing you can do is you can click over on the left here. This is the symbol results overview. The next one is the model results, which is going to show you the actual performance of the models. So it shows if out of 34 trades, if you did every trade, you'd have made 1,031%. And this does go, I'm going to bring up the full trade log. You can click on this button here and it pops up. And I have this browser expanded, I think, by 200%, so I have to stretch this out. But it goes back to 1980. So you could have bought and held Apple and made more money, but you would have had a lot of ups and downs on this thing. So you can see all the trades are happening. So this is the trade log on an intermediate basis, otherwise the weekly. And what I'm going to show you on this screen here is that it shows you that the average win was 100%, basically 99%. The average loss was 19%, and it had a ratio of 5.1. So what that means is that you get you make $5.18 for every dollar you lose. And a lot of folks, and I know you folks are around the internet, you see all the hype and the craziness, and you see the things that go guaranteed 92% accuracy, all that kind of stuff. Anytime, this is my opinion, I built my first trading model in 1981. I've lived as a quant and doing the methodology that you're seeing here. I actually started developing and building back in 1984 and have used it throughout my entire career. And what it tells us is that you don't make money from being accurate. If you have to be 92% right to make money, you will fail. No one's going to be right 9 times out of 10. Not even the best basketball players on the free throw line can't make, some are up at the 90% range, but you're never going to get that good in trading. You're lucky to be 50% of the time. So if you're only going to be 50% of the time, in this case, this is 44.11% of the time that this thing wins. So how does it make money? How did it accumulate 1,131%? And the way it does that is this ratio. And that has, I'll show you a couple of things here on this screen, but what it tells you is that you want to make sure that your average wins that you get are way bigger, at least 2 to 1 or bigger than what your losses are. And I'll explain the ER ratio in a minute, but this 5 to 1 ratio is very good. I'm making $5.18 for losing. So in this case, I'm losing 6 times out of 10. And I always point out that you're going to, we'll talk sports, if you're a baseball player here in the U.S., I know we've got some international folks on this screen here, but you can go to the Hall of Fame by striking out 7 times out of 10. You bat 300% or 30% of the time you get a hit and get on base, you're going to the Hall of Fame. And it's very similar. You're not going to, a lot of times between 40 and 60% is where your accuracy should lie. And then this win-loss ratio is going to make a big difference. You see I'm going to highlight this here, the ER ratio here is 228. And you'll also see up at the top above every chart this range up here, poor to excellent. Now this one is in the excellent range. It's showing a 228. Good is 100. And let me explain what the standard is. So when you're looking at all of the symbols in the database and you look at this bar, you want it to be at least good or 100 or better. And the standard is that I'm 50% of the time I'm right. I make $2 for every dollar I lose. So the scenario goes like this. I'm 50%, so I'm going to lose 5 times. I'm going to lose $1. I'm going to win 5 times, and I'm going to make $2. So I'm going to have $10 on my win column, 5 on the lose. I make $5. And that's how money's made. It's through a combination of making a series of trades and being able to stay a step ahead of what's going on. And so when we get to what I was just talking about here is this 5-to-1 ratio is a very big number. And when we break the same chart down, if we go to a daily input Apple in here, it's not going to be nearly as big because the holding periods are less as well. So when we look at Apple on a short-term basis, we're gonna see something much different here. And the trade profile here, we're going to go over to the model results overview that we were just at. And now you see it made 774. It's 42% right, similar, but we start to look at the win-loss, it's 17% versus 7. And the ER ratio on this one is at 103, so it's right at that minimum standard. Since we're at 40%, the average win-loss ratio is 2.46. If you're exactly 40%, 2.5 times 40 will give you 100. And that's where this ER ratio comes from. So you just want to make sure that your winning trades are bigger than your losing trades, and you don't have to get the accuracy. I could bring up some symbols that are going to be 60, 70, some of them 80%. There's probably some in here on some of the ETFs and mutual funds that are 100% correct. They've never had a losing trade, and maybe they've been around for a long time, but those are more of an aberration than what you would expect to see. And the patterns that you're going to see is that 40 to 60% range is where a lot of these trades are going to fall in. And when those happen there, then that's exactly where you want to be. And then you want to look at these ratios. And the easy way to look at the ratio is just look at this ER rating, which it'll give you something greater than 100, 120, 500. There's some that are huge. They're 1300s. There's a lot of big ratios. And one thing I just will caution, and I don't have any examples, and I know Michael's on, or if you happen to know one that's got a huge ER, a lot of times what will happen is that you've got maybe 1 or 2 trades blew this thing up. Sometimes you'll have 2 trades that made a lot of money, and it blows that ER up. But once you get enough trades, this is also important. On this particular stock that we brought up, there's actually a total of 240 trades. And this is a big sampling. So by the time you get to 240 trades, you're going to get a normalization of the ratios that happen. So this is a really validated strategy because it's got so many trades. You've got a lot of things to look at. So you can see we had 101 winners, 139 losers, but we were able to make 7. If you did every trade since 1980, this is where you'd end up. And we'll talk ultimately as we continue to do these shows every week. We'll go into details talking about, how to look at more of the shorter term range. Maybe I'll do that yet here today. But there's a complete transparency here. I'm going to pop this box up again. And this is every trade that has been generated since 1980, all 240 of them. The good, the bad, and the ugly. So there's, and one of the things, especially this model is an okay model. I would like to see models above 200, maybe even 250. We've had a lot of folks over the years that put a 250 or better signal in there to make sure you want to make sure, this is the point of what I'm talking about here, is that you want to make sure that you absolutely got your winning trades are much bigger than your losing trades, and that's how you're going to make money. And what I wanted to address is I saw a comment somewhere on the channel. Well, something like I'd need, before I could do the airline trades that I talked about last night, I'd have to know more. And there's nothing more to know. What's the more is this, is that the reason why all the transparency, every trade is here, so you can look at these things and see what kind of consecutive winners and losers. Now this particular stock has had 3 consecutive winners. You see over here, there were 5 consecutive winners, a loser, 3 again. This thing gets on, it's Apple, right? So you're going to have these consistent winners, and in the bad times there in Apple, you got consistent losers, but they're very small percents, 3%, 1.6%, very tiny losers, and that's where this ratio comes in. Here was tiny losers, here's some winners, and then you get to the 27s, the 10s, and this is where this ratio comes into play. And that's what's going to make you money. And you should, I would just watch as you look at these, as you're choosing constituents for a portfolio, that you do this, because one of the things that's really important, I think there's something else, and choosing a signal, there's another element that's important when you're looking at these trading models, is the bet size, or how much money you're putting in each idea. And I'll go into the portfolio manager here in a minute, but that's really important, that you spread the bets out over a certain amount of ideas, over a amount of money in your portfolio. So what I really want to bring to the public here is that I'm going to teach you folks how to actually run portfolios, not individual trades. So we're still looking at individual trades. You have to understand the individual trades to be able to pick the right constituent list from the standpoint of what symbols you're going to put in your database. Now, I would just tell you, we are living in a very unique time. The short-term models have been off the map good this year, and it's because of the level of volatility. The weekly models have actually, many of them have done well. We were just looking at Apple up 60% on that trade. It didn't buy the bottom, but it bought at a point where it was able to identify this new trend. And when you see this type of action that's coming in, you have to understand that this current situation is just so volatile that the short-term trades are going to be much more, not accurate, but much more active than the longer term. And I've talked a lot about this because I review the database every night, is that the weekly signals tend to hold longer. So I'm going to continue on a rant here for just a minute. And I think what I'm going to do today is we're going to go through this section. I'm going to open up so you folks can give some questions that will help guide me into a good place to be. But I'm going to bring up, there's a button here in the research called All Stats. And if I go to the All Stats page, there's a map showing me on Optimized Daily. So what goes on, there's 2 models, 1.2 and 3.2. 1.2 is a more aggressive model. It has about 30% more trades than the 3.2 model does. It will get in and out more often, and it will definitely catch V bottoms, which it did amazing job out of the March lows at figuring out how to play this market. But as we go across the board here and we go over to the right, you'll see the positions overview. Let me draw a couple things in here. Yeah, there's a couple things. Optimize daily, optimize weekly. These 2 points are telling us what the average holding period is for the best model. So it takes a combination of the 1.2 model and the 3.2, and it optimizes based on a total net profit. So it's going to, in the database, there's an optimization table that said this one's best based on total net profit, and it maps it out. And the way it maps it out over on the left, when you put a symbol in this box here, it will always find the best model for that symbol based on total net profits. And that's on total net profits based on closed out trades. And so a couple things here. In this table here, last night it was interesting. We had, these are the new buys. These come out every day. And Michael asked a question earlier on that I think would be a big rollover. Maybe I answered quickly and said no, but maybe there will be. We'll see how this thing runs. And one of the things that's important to understand, if we did see 1,000, 1,500 sell signals, and that would tell me something about what else is going on and what phase the market might go into and all that. That's me. That's Bob, the analyst. You don't have to know that. All you have to really know is that this is going to give you a market sentiment. You can see last night was neutral. We had exactly the amount buying was selling. So you see the sentiment was neutral on this. But back over to this table over here, the optimized daily, the map that is generated. The map that is generated here gives the average duration and also tells you the amount fulfilled on average. And then it tells you the average profit, and it gives you a standard dev. All of these will give you the standard deviation as well. And then over here, the current profit. So it tells you the average profit is actually the same on this optimized daily right now. So the database is pretty maxed out. I've talked about this. I've got a lot of arrows. Let me clean these off here.
Well, can you spend a bit time explaining the standard deviation thing? Because like I've been kind of struggling to understand.
Okay, yeah, I will go through that in a minute. Yeah, so the, where was I? Yeah, so this 82%, and I've talked a lot about this, is that the database is maxed out, and I'm going to draw just on the screen randomly, folks. So the database went to 90%. It dropped to 65. Now it went back to 83. And I've been talking about this for a number of weeks, and we saw another positive rotation. I'm still expecting for the database, this number here, 82, to probably drop down to 42 at some level there. So the I still expect to see this thing roll over, and maybe as we printed very close to the highs of February, that maybe that's what's going to happen here. I'm anxious for the dust to settle and to come in, see the database run tonight, and see what I come up with the video tonight. But all of these stats are going on. And Michael, your question was about the standard deviation.
Yeah, like the average day long standard deviation. Like I'm trying to like for example, on the daily one it's 11, and like I just can't get like how to interpret it.
Yeah, well, it goes through the entire database of 16,000 symbols and on the optimized, and it's looking at the average days long, and it's compiling them throughout the entire database. So it's a big calc. And then the standard deviation is just showing what the deviation is versus what the average. So the average is 36. And so standard deviation is going to be, minus 11 plus 11 here on that number. So 26.
Not from that number, but from 39, because it goes from average day long, not from current duration. Or it goes from current duration.
Yeah, so the current duration is just telling you what the average is on all of the open positions on the optimized models, what that current is.
And so 11 is?
On I don't know what.
From the long?
Yeah, so on this 13,720, these are the raw numbers, the 13,000. So there's an optimized number. We don't show that number in here, how many trades are optimized. I believe we may have that on another database on the intermediate, but we don't keep it on the short term. But these numbers here, that's based on, out of this pool of all the buys and sells, it's just calculating what the average long is, what the standard deviation is, and what the current duration is. So these two numbers at the top here are being calculated from looking at the market stats on all symbols. And then the current duration is looking at open trades, figuring out what the average open trade is. So we're right at we're at 92% fulfilled. And I know I talked about this number a number of weeks ago. I was saying we usually only get about 82. Well, everything is, this rally that we've been in, everything's stretched out to extreme. So we're at 92% now as things go on, and that's including the rotation of the new buys and exits and all the things that are going on within the database. So this number is what is telling us that somebody mentioned that everything's overbought. It is overbought, but overbought doesn't mean it can't keep going up. And that's one of the things I learned a very long time ago from the standpoint of understanding markets, is overbought can last a lot longer than you think. And you usually won't hear me even mention that term as far as that goes. You're not going to hear me mention anything about an overbought or oversold type situation at all. So hopefully that was helpful.
Hey Bob, real quick, to the left of your arrows.
Yeah.
Can you just again recap the difference between these three blocks? You have all the models. Is one?
Yeah, I killed the arrows right as you said that. So let me bring them back up.
And do you mind, this is Tim, do you mind showing us how you got to this screen? I know it's under research market overview, but I'm seeing the S&P 500 chart in the top right.
Yeah, so when, I got to get off of this thing. So we'll do that first and then we'll cover the numbers. But you go to research, and typically you can do it here there's an all stats right here if you see it highlighting. You click on all stats.
Sure.
And that's going to bring up this screen here, and then you can scroll down, and there it is.
Got it. Thank you.
Yeah, and the other thing that's here and is optimized weekly. This is like the historical database, and I'm looking at just getting what's in there currently, because this is everything that's ever been in the database. So there's been over 31,000 symbols in the database. But yeah, so that's where you can click this, and what you'll see when you click weekly, this is the weekly percent long. And if I click daily, you kind of have to click back and forth, and I go to all stats. After I click daily, it will bring up, now it shows 82% on the daily. Okay, and let's talk about these columns over here, the other question. So the columns are optimized daily, and then it goes to each individual's symbol and its uniqueness. So the average, or the optimized daily, the best symbols hold on 39 days, but you see 1.2 holds 32 days, and this is where you'll see that difference, and 3.2 holds for 43 days. So what is that, like 30% more? Everything, it's right around 30%. Same thing here. 1.2 holds for 21 days, and 3.2 holds for 34 days. And then when you do the optimize, you get it 36. So the columns here are unique to each model, and then it does the same thing on the intermediate models. It's gonna give you the stats by model, and then it's going to combine the best models in that optimized weekly, the optimized daily columns. That answer the question?
Yeah, but and I was also asking about to the left of that, these under model overview. What's the difference between entries 730, entries 724, current entries? Is current entries just on the
Down
day?
here? Is that what you're talking about?
Where you have your neutral, bullish, negative,
Oh,
bullish.
right here, model.
Yes.
Okay, yeah.
Yeah.
State your question one more time, make sure I get it right.
I'm just asking, what is the difference between these three sections? It says you have a date of 730.
I got it. Okay.
724
Yep.
current.
Yeah, so what that is the three sections. The first one, this is basically live. The models 1, 2, and 3.2 daily are going to update daily. So these numbers will be different tonight. I'll break down every section here, and then I'll go through all the elements. The weekly only updates on Friday night's run, and we'll update for Monday. So the intermediate models only issue orders on Mondays only, or the first day of trading. So it could be a Tuesday if there's a holiday on Monday. On the daily models, they will issue models every day. The second section down here, this is for this date range of looking back to 7:30. So it's going to give you all of the buys and sells based on all the output for the last couple, going back to the 30th. So how many days is that? Like better part of 2 weeks, like 10 days, right? And that's going to give you, and it's interesting, and I noticed, I was looking at this last night, and that we have a negative ratio where we had more sells than we had buys over the last couple of weeks on balance. And then when we look at the intermediate, this last one is down here. This is for all the way back to 724. This is the total amount of buys that came out of each model. This is the total amount of sells, and you see the 1.2 is bullish, and the 3.2 is a positive ratio. And what it's looking at here, and the reason why that sentiment number, it's looking at the number of trades that are new buys versus sells. And I came up with this theory a long time ago, probably about 15 years ago or more. And when we added this function to the software, was just looking at is it a positive or negative rotation? Is the database, from the number of trends that it's recognizing, is it shrinking or expanding? And that tells me about more trends, obviously mean there's more positive things going on. And that's why when we're chatting about the market action today, today was a blip. I mean, it felt big. Maybe there's more to it. Sometimes blips end up to be something material, but one day market, one reaction doesn't really mean much. And as we go through, we start to maybe see the database here. Maybe tonight we get a lot of sells. Like I said earlier, Michael asked me if I thought I'd get a bunch of sells, and I quickly said no. Well, I don't know. Okay. The answer we'll get the answer here in a couple hours. The servers run every night. They finish approximately at 8:30 New York time. And, so that's when we'll know the actual answer, what comes out of the database. I can guess all day long, and sometimes I'm pretty good. I've had my finger on the pulse of this thing for, 22 years. So I definitely know how it responds a lot of times. But we'll just see. And that will tell us also a lot about what's going on from the standpoint of maybe of the market rotation that's going on, all those type of things that I've been talking about on the nightly YouTube videos, is really what's going on as far as all the metrics here. Any other questions on this section here while we're here? Question for, I guess, Zoom people. And Jay, I'm assuming you're watching the YouTube everything, so I'm not seeing that right now. But the if you have any,
Yeah, I'm doing my best trying to keep track of everything, but
I'm sure, man. I'm sorry.
Hey, Bob.
Yeah.
This is Vinay. Question: how does this model account for stock split?
The data accounts for stock split. So if there's a split, like Apple's announced, right? When that split happens, we'll pick up the split from our data vendor. Our data vendor will do that. Now we use the same data vendor as Yahoo Finance, and we have for quite a few years now. And when the split comes out, we'll get split data. If you ever come into a stock that it was split, right, and it doesn't reflect, there's a big drop in the price or something. It was, it was $40 yesterday. It was a 4-to-1 split. Now it trades at 10. If you see that, what you do is you go in here to feedback, and you just tell us bug report or tell us what's going on. Comment. Just type in this box, and we'll get it in case we missed it. Typically, what happens is we have an algorithm in the database that actually looks for any changes over a certain percent. If it sees it, it actually runs another routine to make sure that the data is correct. And on occasion, something will slip through. Most of the times, it's going to pick up the split. And I know, anything that happens like that, you should be able to see.
So for instance, today,
Tesla.
I believe, exactly. So that's what I was wondering, like how Tesla will be picked up in here.
Oh, did Tesla do a split today?
Yeah, it's rallying right now. Or it did a little bit.
If I put the right symbol. Yeah, so so what should happen tonight when we get I'll get it right yet. TSLA. Fat fingered that. Yeah, so what will happen is the chart, everything will be adjusted. What was the split? What'd they do?
5-to-1.
5-to-1? Okay. Yeah, so divide this by 5. All the data going back should be split adjusted.
So will the signal be affected, or it's just...
No, not at all.
It includes...
Not at all, because it's all the same ratio, right? So it won't change how the chart will look when it comes up tomorrow. It'll look the same. It'll just be 5 times different.
Oh, okay. That's what I was wondering. Will it trigger something else in the model, or will it say,
No, it won't cause, because the prices, that's the whole point of a stock split. It just normalizes exactly what happens there. So it's just going to, every bar, instead of being a $20 range, is going to be, a $4 range. Yeah, but it's all the same ratios. It's not going to affect the indicators or anything.
Okay.
Yeah, everything should be fine. So Jay, keep an eye on that.
He said the dirty 4-letter word. I was trying to keep quiet, but
Yeah,
I will.
Our bad. Our 4-letter word around here is data.
I spent all weekend finding the dirty 4-letter word.
Yeah,
it was not fun.
Yeah, so we do a lot of scouring. We'll find things that are out there that are bad. And listen, don't hesitate, please. We depend on you folks, and we always have on our user base, to hit this feedback button. So if you see some funny data, let me just talk about funny data. If you happen to see it, it's usually reasonably clean, but if you see some funny data, click that feedback button and give us a symbol. And if you know the date, if a date's on the screen or it's easy, then, do that. Tell us.
Hey, Bob, on that subject, look at support 3 on the page you're displaying.
Yeah. Bob, and as an idea, yesterday when I was sending you all these bugs out, I think it would be good if you could add here, so we could add pictures, because sometimes it's easier to do the screenshot to show what's the problem is. And for me with this feedback button, you could only write the description here, so you can't attach anything to it. So if it's possible, it would be very helpful.
I think Jay started answering questions, I think, using Loom, right, Jay?
Yes, I did.
Yeah, so we can, like Loom is a good one where you can do a video and you could email support, I guess, if there was something that was really critical, if you can't describe it, and I get that. Yeah. No, I get that. So
it works on the email for now. Like, is it good enough? Like, it wouldn't get lost if
yeah,
we
if you can always do, yeah. Well, we'll have to get a good, but the feedback is good. So if you have an issue, if you let us know what the issue is, just send it to us. I would do it on the feedback, and you can't put right now you cannot put a graphic in there. You're stuck to these text box right now.
Yeah, because I've been monitoring all that, and I'm building the list of the symbols that I have found with bad data, and I know that one symbol, I don't know, it was brought up over the weekend, I believe it was on Friday, but I'm working on that, and I had a bunch of symbol requests. Some of them did get filled, and then there's new ones that I'm actually listing right now. So that all comes through that feedback messaging, which helps, and I'm always monitoring that.
Yeah, we're somewhat sensitive, folks, on symbol requests and things like that, to make sure that they have a certain amount of volume and it's just not junk getting in our database. Because when we put stuff in here, we've got to run it and collect it. And as long as our data vendor gets it, normally we can get stuff, but we're trying to keep things down to reasonable items, no penny stocks and things like that.
Good to know.
Any other questions here?
Hey, Bob.
Yes.
Yeah, so this is Jason. I actually went through pretty much the entire database, like all 16,000 or so ETFs and such. So I've actually found and kind of cataloged a bunch of that stuff. There's some data. So, for example, some of the tickers actually don't match anymore, like PW. In the database, it's listed as like Pittsburgh Railroad, but in actuality, it's like a power REIT or something like that. So do you still want that to all go through feedback, or should
I would email that, Jason. I know. Okay. I would email that. And how did you do that? 16,000.
It took a long period of time to actually basically pull through the data, start scouring through it, because the goal was to start looking at how do we use. I mean, I understand that the model essentially is designed for portfolio management, but I was wondering if there's another way to actually utilize the data that's inside to work backwards instead of top down and then using the model to manage basically the portfolio. What were the correct parameters to look through it to actually generate alpha?
Got it.
And so in that theory, right, are there specific categories based off the data that's in there that actually say this works, this doesn't, just empirically? What I found is that that's not the case. You can't like just take an ER ratio and expect that to be, to get the best returns, et cetera, et cetera, et cetera. So it's any combination. But bottom line, it more or less became a story of you still need to do the work to screen separately.
Yep.
To actually look at basically from there, how do you generate the portfolio?
Yeah, and that's actually really good, because I've talked about this forever. ERs and all that stuff is good, but there has to be another methodology on how to select constituents to go on the list that are outside of just the technical viewpoint. That it's not very good. Now, in our Portfolio Expert product, though, we've got a pretty intense query tool, so we can do some pretty intense data mining in that on the stats. I think there's 42 of them we can dig into and do greater than. We can actually put in multiple. We can put ranges. We can do a lot of stuff in that tool that we can't do on the WaveTech side. But still, your point's well made, is that you need to have a selection process and I've showed it a couple times, and we used to run, and we're looking at some things right now. Jay and I were talking about it the other day of actually looking at doing some fundamental things. I brought up some screens before in the past, Excel sheets that encompass the stats along with fundamentals and bringing in a next level selection process, which is really important. And, you know, it is important to know what type of stocks you're putting into. And maybe you would have got lucky and bought Kodak, but I think it's since collapsed completely. It'd be interesting to bring that up. What is that symbol? KOD something? Anyone know?
Yeah, you had KO. Was it KODK or something?
Yeah, I think it's KODK.
Yeah, we'll bring it up for fun. But so that selection process is pretty intense. So are you saying you clicked on 16,000 symbols, Jason?
So, sort of. What I ended up finding is out of the roughly 16,800 or so symbols, it got to be a bit of a challenge because several thousand of them are actually missing sector groupings.
Yeah, they are.
Essentially, you know, you try to narrow it down, I guess, first starting with a majority of the people who are probably on right now are not going to be trading into mutual funds, just given how they trade, given that they don't actually behave the same, management fees, et cetera.
Right.
So if you start to strip out and get down to outright individual stocks, right, then you can kind of narrow the field down pretty significantly up front. The question starts to become, you know, do you start to actually include ETFs? Because some of those by themselves, right, some of the Vanguards or some of the triple leverage or whatever not, they might do some of the things that you want them to, but it's just kind of a philosophical debate of, you know, how do you want to create the portfolio?
Correct.
So I did both. I tried to actually look through kind of both sides of, hey, what actually performed better as far as the model? Ironically, there were some ETFs that actually did, you know, fairly well. But what you ended up finding is that over time, because I actually did look back periods of, you know, 10 years, 5 years, how do they compare with basically S&P? How do they compare with just, you know, long-term holding investments? The weird part is that there's, out of all of those, you know, ETF stocks, et cetera, there really were just only a handful that you would remotely consider investing in, you know, probably in the last 5 to 7 years.
Yeah.
So
on the ETF side?
Actually, both. Even a lot of the stocks by themselves, the individual stocks, a lot of them were just dogs. You start to look at the performance, and the model does have some parameters that are actually pretty good at weeding those out, but you only discover some of that information actually after looking and scouring through, you know, piles and piles of the data.
Yeah.
Like what you're looking for.
Well, one of the things, and Jay may have some comments on this as well, but that's why building portfolios are really important, and building them based upon some criteria, whether it's a fundamental or even a thematic type thing, like one of these motif kind of viewpoint. Like I just took the airlines last night and I built a very quick portfolio, right? And something like that where you're just trying to trade a set of stocks and all that. And what happens is, and this is something I actually want to touch on today. I don't want to get too far down some of the trails we've been on, but this is really this whole thing, the reason for this, and we just broadcast this thing on YouTube, simulcast it. This is really about users and these kind of questions that we want to address as we go through this. But the overall success is also, there's two things to look at. The individual signals themselves are important, but I had a long talk with Michael, who was on the call on Sunday. We talked for actually several hours, and we talked about this, but the allocation model inside of a portfolio generates about 65% of all the profits. So even some of those dogs that you're talking about in a sequence inside of a portfolio actually can generate actual positive alpha, even though overall they didn't test well. And it depends on, that's why a fundamental selection process is really important. or some sort of rotation with constituents going in and out of a portfolio, some increment, 3 months, 6 months, a year, something where there's a change of constituents is really important, because some of those symbols have good periods and they have bad periods. When you start to look at overall aggregate from beginning to the end, some of them are just aren't going to be very good. But if you had them on from 2005 and 2008, you killed it, right? And those kind of ideas and that kind of construction inside of a portfolio only come from a different set of rules that get the constituent list to fill from time to time and to rotate. Does that make sense?
Actually, Bob, it's kind of funny that you say that, because there was an irony to actually some of the data. What I actually started to look at were what was some of the best performing equities across the board for the past 5 years. And the sad part is that even taking all those and then throwing them back actually into the model to see how they would perform, I think at best I was getting yields of about 30% annualized, which is solid. Don't get me wrong.
Yeah. No,
but,
I get it.
But you're right. There's, if you could find, you'd have to base, and again, it really involves actually manually digging. If you can find some of those performers that actually did have a stretch from maybe 2007 to 2009, right, that kind of thing, where you saw that massive type of return basically after Great Recession, that, and then it had pullbacks and then steady periods of gains. When the model's able to actually pick up those parameters pretty well due to PPM and the other metrics, those annualized returns would actually beat out what would have been like a long-term hold for, say, semiconductors. Right. So that's what's kind of, it's funny that you say that, because that's actually what came out of the results of trying to do this.
Yeah. So I've studied this a lot, and I really appreciate the work you've done here. It's really, really good, because that insight, very few people, we could call up just about all of our clients that we've had on the institutional side, and probably none of them could actually give us that answer. They want an easy fix, most of those folks, not to be insulting, but they just want to turn something on and talk to customers and play golf. And
fair enough. Actually, Bob, to be fair, I actually was institutional side.
Okay. No, you sound like you've been around. So I understand exactly where I hear that. So anyway, but yeah. So this is a really important subject. This is very intriguing, because the things that you're talking about here can be achieved through a fundamental screen. So let me talk about this just for a second. I think I can just address this for a minute. Is that the way that you're going to? Okay, I'm going to rewind. So when you're looking at things, whether they be fundamentally or maybe like right now, I've been talking about this rotation and this small cap, mid cap. I've been really good at picking up on these little micro trends over the years. And, there was some things that came out of 08, 09 that were just incredibly obvious, I thought. And I brought that up to a lot of folks, and some folks did really, really good with those ideas. So the concept is, like right now we know that, there's certain themes that are coming out of this crisis right now, just like 08, 09, and like it really wasn't until late 2002, early 03 where you could recognize any kind of trends. It was just the 2000 to 03 situation was very, very bad. But even then, in 2000, when the .com rolled over, there was a rotation you could have made that ended up doing pretty well. In fact, even in the S&P 500, we stuck all 500 stocks in the S&P. We were actually able to return a positive return on the S&P because it rotated out of the top end of the stocks that weren't moving into the lower, mid-cap sector of that index. And so this whole thing that we're talking about, we're getting a little complicated, but the idea is finding, that's why thematic things work really well. and also looking at current situation and looking at fundamental screens will actually guide you to those places based on the fundamentals that are coming out of these stocks. Even though we're looking in hindsight, you start to see some growth patterns and different things. Out of 2008, I was screaming and yelling at everybody, a GARP strategy, which is growth at a reasonable price. And that was a killer strategy for about 18 months, okay? There was just, the nice thing is when markets get reset, we didn't have time to think about this reset. Things just kind of reset, then they reset back to where they were. But in that period of time, there were multiple months of being able to position in those type of themes or that type of fundamental viewpoint. And so those types of things will go into in and out of favor if you use the same fundamental screen and you went across a 10-year period. You're going to have where portfolio returns are going to be higher on some levels in some windows of time, and then they're going to be lower on the other windows of time. But as you go across, you're going to get a normalization. Like you said, I mean, 30% return is actually pretty respectable. Even Ray Dalio would be happy with that. And, but those are, especially if you can compound that, it's huge, right? But the bottom line is there are ways to achieve that stock selection process, and we haven't even dug into that stuff yet. So this is touching on a subject that we've never discussed on these open forums like this before. But this is where, let's face it, a lot of folks on this call aren't going to, their eyes are already glossed over and have no idea what I'm saying. But there are ways for us to generate some of this stuff and ultimately bring things in. Hey, Jay, I'm going to put you on the spot. Do you have any thoughts on any of this stuff?
Sort of. I was actually sharing the COVID Crusader portfolio with Jason. I believe I was trying to do my best to listen to everything he was saying and also answer some questions. But I think that kind of touched on it, and I guess I can go ahead and talk about it real quick if you'd like.
Sure.
COVID Crusader, real quick, I think that encompasses what Jason was saying, where over the years I developed different portfolios, and at the time I thought I was calling some of them like weather the storm, or I tried to gear some towards maybe they didn't participate as much or excel when the market was really strong, but I noticed that they performed well when the market was going down and not doing much. But and here, I'm all thinking I'm really good in hot stuff, knowing what I'm doing with portfolios, but clearly when this year hit, it kind of kicked everyone in the butt and is like, oh, what's going on here? I thought I had good portfolios, but again, not that they weren't good portfolios. It's just, this was like a year that has not been seen by most of us other than in history books. But what happened was I was looking at all my portfolios and watching the performance go down and everything. And I noticed that 3 of my portfolios, 2 of them were down maybe 2 or 5%. When others were maybe 10 to 15%. And then other portfolios were not my own, but ones I was watching were down, 30 or 40%. But I noticed, like I said, 2 were about 2 to 3% under, and 1 was actually up 2 or 3% when everything was just, crashing. So what I did was I took the 3, combined them together. I didn't just take all of them, because if it combined, it would be like a 70 symbol portfolio. But what I did was I did some research and I did some calculations and took the best, I don't know if it was maybe about 8 or 9 out of each portfolio, and then built COVID Crusader, and noticed that it did. And I even had done a back test to 2007. I don't have that copy now. It actually just now back tested 2010, but it did really well even in the 08 recession. But a lot of it was basic everyday needs that people need regardless of what happens. And others just, they're industries that excel when things are going bad. So it just kind of encompassed what Jason, I believe what Jason was trying to go for, and I had already done the research and came up with that. So I saw you just brought that up. So yeah, right now there's 26 active symbols, but like I said, it combined the 3 different ones of the best performing, but a lot of them are regular, everyday, off the shelf items that you need at the store. Some of them were more of the pharmaceutical, health type stuff. So,
okay. Yeah, just speak up, folks, if you know, if you're getting from that. But Jason, that's really good, and I thank you for putting some of those spreadsheets and stuff together.
Oh, you're welcome. And go ahead. Oh, I'm sorry. Yeah, you're talking to Jason. I'm so sorry.
Jason, you're Jay.
It does that confuse the heck out of me every time you said Jason. I got to do something, but I'm sorry, Jason. I'm going to be quiet now.
No worries. Thanks, Bob. Honestly, part of the reason why I bring it up is because I want to save everyone on this call a whole lot of time to not go through 16,000 some odd different things to actually get to the point that, look, save yourself the work. What I found is exactly what you pointed out, that the model does things that are very specific to certain periods of time. It's about understanding what you want to put into the portfolio. Theming is important. That actually matters. But also just even parameters, like keeping the portfolio size appropriate to based off the capital inside.
Absolutely.
All of those things like absolutely matter. So
absolutely.
But
do. Yeah.
I mean, it's hard to take us into the weeds, but
no, that's good stuff, because that's exactly what I've talked about in past meetings. I've talked about this where all of those things are important, and it's position sizing. You want to make sure you have big enough positions, but not too little. You can dilute a strategy by putting way too much in a portfolio, and there's and it's not necessarily magic, but there are some numbers that tend to work pretty good, and we put some on the wizard page, for amount of monies, and things are changing a bit because of fractional shares and being able to bring in different, more sophisticated strategies. And we're stuck right now, Jason, with WaveTech is somewhat limited. Portfolio Expert, we can actually do something really unique where we can trade multiple multivariant models. So we can use daily, weekly, and monthly all in combination and do some really cool stuff. This is a pretty flat program as far as you can only put a symbol in there once. And our other platform, you can put every model in. You could put 1, 2, 3, 2 daily, 1 point. You could do all kinds of combinations. But you'd also generate a lot of trades, and without trade automation, it's very difficult as well, which we're actually working on right now on a couple levels. So I know this all sounds complicated. It doesn't have to be that complicated. And Jay and I've been kicking around. There's we're going to clean up some of the premieres. So when you go to subscriptions, I'll bring that up on the page here. There's a bunch of stuff in here. These are old stuff. We're going to be revising this entire list. Some of these will stay, but we're going to add some of these things down here, and that'll be useful. So if you don't want to go through all this, we're going to supply some of these things out there to the community and try to get some things. My real goal is to actually bring in portfolio management into the world of individual traders and actually teaching them how to manage money, is there's much more risk control and more sanity that can be gained from doing this. And there's always going to be times that Jay was talking about some of his portfolios rolling over pretty good at the beginning of the year. Well, that was just a crush job that that just happens. That's part of it. And then things have to reset. But a lot of those strategies came back pretty good over the last several months just because of the monster rally that we've seen. So any other questions? That was really good, Jason. Appreciate it.
No, thanks a lot, Bob. Appreciate it. Sorry, just one thing. I'm the Jason that actually sent you the templates.
That's what I thought.
Yep. Okay.
Yeah. Thank you again.
No worries.
Yeah, we're actually looking at using a couple of those. I really like the couple.
Okay, great.
Yeah, I've got a guy, my TradeStation guy, actually working on generating some pretty cool stuff, and I'm hoping to hear from him any day where we're just going to be able to spit out a bunch of numbers and put something in that inside of WaveTech that everybody will have. And ultimately, we're looking at other solutions, but that stuff's just really powerful. I mean, not everybody wants to sign up for TradeStation. So anything else, folks?
Well, I didn't know if on there you wanted to show, did you look at some of the small block portfolios I shared that maybe working?
Small block Hemi Cuda.
Yeah.
My favorite car.
Small block Chevy. I have others, but basically small block just pretty much means small cap. I was just trying to be fun with it and play around with the name, but small block, anything small block means they're small cap companies. And most of the small block, the Hemi Cuda and the Chevy 396 are all daily models. They're a mix, both of them are a mix of 3.2 and 1.2. The Chevy is more of leans more towards the daily 1.2, while the Hemi Cuda has more of the 3.2s. And there are a few other ones I have. I actually was doing a Firebird 350 HO, which is nothing but daily 1.2. So it's pretty aggressive, and I'm still developing that one. But I wanted to try to share it and help out and provide something that may be useful right now.
Yeah, some of these things are probably already pretty extended, I suspect.
I think so.
Let's see here. Yeah, not terrible. Couple. But yeah, so but that whole theme thing, folks, and let me go through something here, and I want to go through the portfolio I built, and I showed on my airlines Buffett, and I just did it from 320. So I want to talk about this. This is going to be something I wanted to make sure I got out today, and we're getting a little long in this meeting again today, but let's kind of focus in on something I think is kind of cool. What I wanted to show two things. I wanted to show exactly how you can control this. I don't know if I'll go through the pain. It shouldn't take, I'll just show you how I did it. Number one, I'm not going to rebuild it from scratch. I was going to build it live, but I'm going to show you what I did here. And all I did was I took the idea, going back to my video I did on 3.5, and trying to take advantage of Buffett's screw up, right? He definitely screwed up big time. I mean, I don't even know what he was thinking. You know, he had to know that the U.S. government's not going to let the airline industry go down all the way, and no matter who's running the place. And but that was an opportunity, big seller out of the way. I'm assuming that he actually did what he said he did and sold out, and maybe he was the big seller that pushed it down, all that, but it doesn't matter. On 3.5, I put it out. So what I did was I turned, I'm going to show you going on the create modify. I'm going to go to this portfolio, and I'll show you what I did with this thing. Is I started on 3.2. So I know 3.5 was the buy, and I put all these symbols in. I'm going to show you the exact what I did here. Is I put in the symbols that I picked the top 10 airlines and just threw them in here. And as I go through here, I set them in 320. So I just want to trade this particular trade. I've been telling you folks that the next round of trades that come out of this thing are going to be good ones, and I still think they are. You know, we'll find out whether the world just ended today. I don't think it did. But but we're going to see this thing lay out. So here's the start date on the 2nd. The drop down I did, actually I left it, I'll leave this at 5,000 because I originally had it at 500,000, but that's okay. We got $50,000 in the account. I'm going to leave these settings in here. I put it on high activity, which is going to target using 100% of the cash. No fees. Here's the 10 symbols. I put them down in this optimized daily box and just let it sort out. So as I've talked to you about before, most of the daily models are going to migrate to the 3.2 model. So I just put them in there, and this is everything that we put in. And here's what I did. And this is something, I hope I can get this so you folks can see this. But on all of these airlines, when I click on this green button, it pops up this box here. And what I can do, and I did these settings last night. It just takes, this one's a little clunky. You got to do these drop downs. But I turned them on for March 2nd, and I just referenced what I told on a live stream a while back. And I said, hey, if you, and I just took a random date, and there's a way to actually make this even better if you want, or actually make it more realistic on what you may have done with the trades. But I told everybody around, it was June 3rd, June 5th, I said, as we approach this 200-day moving average, I would just take profits on these airlines. And things like Allegiant, some of these things were almost doubles. It was a crazy good trade. So what I did here is I took the action telling the models, I said, I don't care if you're long, I don't care what you're doing, I want you to stop trading these on the 5th. So I'm going to show you the trade log as well and what happened here. So I said, okay, June 5th, stop trading. So today, let's say we felt this thing was real material and I had a portfolio running. I could go in right now, I could set a bunch of stocks that I currently hold in a portfolio and set them for August 12th to turn off. And what that would do is on August 12th, it would exit the trade. So tomorrow morning, when I run it this way, it would actually generate orders to sell out of this. Can I do that? Yeah, I might be able to simulate this. We'll try this in a second here. So on June 5th, I said, sell everything. Don't care what it is. Don't care if it's a good trade, bad trade. I just want to get out of everything. So I forced it, but I could have done on each individual symbol. I could have told it one on June 8th, and I'm looking at the stock and go, you know what? I'm going to get out of this on June 2nd. I could set these dates, and I can control what the portfolio manager is going to do at any given time, including maybe I don't want to buy the thing the day it told me to buy. I can set it so it buys on another day, okay? And so I have control over this. A lot of folks, they build portfolio, you dump stocks, don't realize that you do have control of how this thing, when it's going to buy and when it's going to sell, but you have to have an active signal to be able to control it, okay? So you have to have an open position. So an open position does not have to come in on the day that the model said. You can actually control that. In this case, I just said, on August 3rd, start trading these stocks again. And I mentioned it, I don't know, I think a live stream or two. In the last couple of weeks, I mentioned that, hey, watch out for these next round of trades, because I saw that the airlines were setting up, and a lot of folks on the live streams are always asking for Boeing and those type of things. So anyway, what I did was I turned all the stocks back on and said, start trading them on August 3rd again. So every one of these symbols, this is for American Airlines. I'll just go down to JetBlue here. You'll see the same settings on each one of these, okay? And so I'm gonna try to generate something here. I'm gonna do a new entry. I'm gonna try to see if this should come out. We're getting close to the servers ready to run, so hopefully I won't get in the queue here. But I'm gonna go here to August, and I'm gonna set it to August 10, which is yesterday, and I'm gonna tell it to stop again. And I'm gonna hit apply, and now you'll see another entry come up at the top. So what I just told it to do on JetBlue is on the open today to sell that. So when I close this window, there's two things that happen. I close this window, you can see a red button now on the 10th. So what it should show me is a trade for the 11th for today to sell JetBlue. I know this symbol's long. So all I have to do, I don't want to change anything, just go down to the very final bottom here, hit allocate finish. And it's done. I'm just going to hit this, and it's going to pop up this thing. Make sure you click on this box up here. And so you're going to see it's an allocation queue right here. And it, depending on how I hit it, it looks every minute for this thing to update. Yeah, it's already run. Okay. Crap, didn't do it. Did I pick one that actually didn't have a position on randomly? Hang on a second here. Open orders. No orders. Good job, Bob. Okay. Let me see. Did I pick a symbol that actually wasn't long? I did. That was, I thought they were all long. Okay, let's try.
Only the luck, right? Only the luck on the
how
live
lucky
show.
was that? All right, so I'm going to go back and do the same thing. We'll leave JetBlue like it is, but I'm going to pick on American. I know that one's long. So I'm going to drop it down, put airlines Buffett, and then I'm going to go right to that portfolio snapshot step, and I'm going to go to AA, and I'm going to do the same thing. I'm just going to add another entry. Unbelievable. Hopefully this one works this time. So I'm going to go here, go August 10th, and I'm going to do stop, apply. Now you'll see I've had it turned on, turned off, and the turn on, turn off actually can be a sell signal as well. So now we have two symbols. Now I'll go down to that allocate finish step, and I'm just going to finish this thing and queue it up. Hopefully when it runs, we actually have an order. Loading symbols should be done. Updating stats. Why am I not getting an order? Did I have to do it? I guess.
Do you have to do it maybe the day before?
Yeah, I'm not sure why I'm not getting an order. Yeah, there should be an order. How embarrassing. So let's see here. Maybe it is. Maybe I have to. Maybe it has to show for today, for the 10th. I'm not sure. That might have been. That might be the misstep here. Sure thought I should have had an order here. And what I'm worried about is the servers have already kicked out. It should have stayed in the queue though. Anyway, try it one more time. I'm going to change. I'm going to go to that. We'll try it. Otherwise, we're going to call it a fail. Create, modify. I'm going to change that to the 9th. But it should have generated an order for today. All right, one more time. So we can go in and just change that one entry. Let's see what happens when I turn it to the 9th. Hit apply. Maybe I better click through the wizard. Oh, you know what? I think that's what I didn't do, but let's find out. I may have to hit the next button to enter it. That might have been it. All right, let's see if that works, folks. Sorry for this boring moment. And of course, now I'll hit the beginning of the moment of the queue period. Any other questions while we're waiting for this to queue up? Sorry, folks.
Bob, I have a question while you're on this topic. If say I set up a test portfolio and I decide, I had Apple in it. I really didn't want to put Apple in it. So I I do a test. I go through, do the allocation of funds. It spits out the results, and then I go back and I go back to the list again. I go, I really didn't want to have Apple in there. I want to just take it out. Can you just edit that create modify screen where it drops it in the model grouping? Can you just delete it out of there?
Exactly.
And
you just delete that
deallocate?
symbol out. Yeah. So yeah, let's do that. Yeah, I don't know why this thing. I would have thought I should have had a trade on there. But yeah, so all you do is go to that create modify, and we'll just rip one out of here. This portfolio is just a. So when you go to this create custom portfolio step,
Mm-hmm.
and then you come down here, and if I want love out of here, I just backspace it out and hit next, and it's gone.
So you can add or delete those as you wish. And what?
Yes.
Why would you not do? Why would you then go back and because before you were showing us about. Maybe it's because once it starts trading through on a model, if you want to add or delete after you're trading on it, then you have to go through the formal stop and start date.
Yeah. So So here's the consideration for why you do that and why you don't. If we're just testing something, we decide we don't want it in there. That's one thing. But if it's actually a symbol that you owned and you don't want it in there anymore, and you want to maintain that portfolio, then you would use the start stop. So, if I'm just testing, like right now, I don't care about this. I don't have any money in it, and I'm just trying to figure out what I want to have in it. Then I can just go in and do what I just showed you. Otherwise, I would use a start stop on this thing.
Okay.
Okay.
Yep.
Anything else, folks? Yeah, we kind of. Yeah, futures up 8. I just needed to get a snapshot. Anxiety. Anyway,
what do you think?
I didn't get through a lot of the models and things like that, but we did hit quite a bit of, I think, interesting content. So let's see what other questions are out there, and we'll just continue down this road that we're on here. There's no way I'm going to have enough time to go through some of these other things.
This is Tim. How would I as a user want to just see how gold or silver stood? Say I was wanting to use GLD or SLV, for example. Like if it's for example, after today's big sell-off, is that a buying opportunity, or should I look for a lower support level, that kind of thing?
Yeah, I've been covering those things on a regular basis. On an intermediate model, I don't think anything's going to change with these things. Maybe this is the weekly GLD. If we went into, let's just go over here and put it on a daily so we optimize. Yeah, I don't think there's going to be, this has been a great trade, but I don't think there's going to be much of a change on this symbol for sure. I don't know where did.
So say for GLD. So are we looking at a short term correction, something that might end this week, or when you talked this morning, I do listen to you pretty much every morning.
Yeah.
Are you looking at more like 3 weeks? Because the silver one, it sounded like you were saying yesterday that, the trend is so strong, but then I thought I heard you say, well, if it fell below a certain point, it might go on for a few weeks before we kind of see the next leg higher.
Right. And I would say the only answer I'm going to have for you is I'm going to cover both those markets tonight in the video.
Okay.
And
that's fine.
I'm going to have to dig into those. There's no easy answer there, but I do think there's, these trends are still very alive, and looking, I don't want to get too deep in here, but when you start to look at some of these symbol, and gold just ripped through everything.
Yeah.
And it's look at this. It's down another down 18 right now, so it actually opened lower overnight already.
I know it's not unusual when you get a parabolic rally like to those extremes to see some really sharp sell-off, and so I'm expecting it to be short-term. But you know, there are some analysts saying, you know, it could be one of those situations where it goes on for a couple of months or something. So
yeah, and you know, that's kind of where I'm at. You know, and that's why I know that the metals were really close to a top, or they have completed a top. So that whole scenario I was trying to paint out really went around the market grid, especially on a weekly basis. When you start to look at this stuff here, I'm just going to put that on. Yeah, this grid, you know, we printed all the way through. You know, this is silver, but if we go to gold, and we printed through everything. I mean, and this is the daily, and I would suspect you can see the range change substantially. I'll bring that grid on just for a minute, so while we're chatting here about this stuff. But the grid today is 19. It looks like 1908, 1928. That's where S1, S2, and then 64. I would expect this thing to, just because of everybody's looking at that missed this thing, there's going to be buyers hanging around, I suspect.
Yeah, that makes sense.
You know, so.
By the dippers?
Yeah.
Okay.
Yeah. You know, and you might be able to pick up something like on a 60-minute graph here. You might be able to figure out something off of that. And we're well below the 200-day. But now I had, like I said, I was talking about last night. I thought that we were going to see that, potentially see 1978. I didn't know we were going to see, you know, 1928.
Yeah.
That was not in the cards, but once these things get going, and especially these markets that get all hyped up, you know,
yeah,
that just happens.
All right, thanks.
Sure. Yeah. Okay, folks. Well, we did another big session again. We got a live cast tomorrow, so we'll definitely dig into the markets. I'll cover all this stuff. If there's any last questions on WaveTech, if you want to ask them, go ahead, and we'll finish up with a final.
Hi, Bob. Richard here from Berlin. How are you doing?
Good.
Yeah. Since there's so many mutual funds and index funds in the WaveTech, my initial impression approaching WaveTech was that we'd have a better handle on picking out individual stocks and catching the gains there, whereas mutual funds might have, you know, diluted gains, diluted losses also. What's your take on mutual funds as part of a portfolio?
They're good from you know, like a core. I still think there's some value in some of those. I think it's a good thing for, you know, some of the money. I think some should be aggressive, and there should be a number of different strategies that happen there for sure.
Okay, so playing a couple of different approaches, some aggressive, and then have part of the portfolio as you might have in bonds or whatever, but have a certain amount allocated to mutual funds that are well managed.
Yeah, and yeah, I would look for those type of things, and I would also use the intermediate models on those as well. I would not use the daily short-term models at all. And
of course, yeah.
One of the things I bring up that you can look at if you go into the Portfolio Expert, the dashboard that's there, you can actually expand this. But some of the breakdown, you can switch it from equities to ETFs, and you can see the traction on the database on different levels. And mutual funds has been a lot higher. Mainly because there's a lot of bond funds in there, and that's driven that. So But as far as overall, that's exactly what I would do. I would have some intermediate strategies, and there's a strategy I'm really trying to figure out how to get out over two folks, because it's pretty, yeah, it's actually an amazing strategy, and it doesn't trade as much as some of the other stuff goes. And I'm going to pull it over on the screen here in a minute. 1 second, I'm just bringing it up. I'm actually going to bring up Portfolio Expert on here, and this global strategy. Even if we just look at this year, this is 5. If we go year to date and we put an S&P on this, the S&P was up about 2, almost 3 change, and this strategy was out, and then it got back in, and it basically has emerging markets, EFA, which is, Europe, Asia, and then it has the 3 sectors, primary sectors, small cap, mid cap, and large cap in here. And these positions, it's running an optimized model that I use, and it's only on this platform right now. And these trades have been on since 3:30 is when the signal came to buy back in. So that was about a week after the lows were printed.
Okay, yeah, nice. I think I'm going to pick up some small cap index funds also. Great. Well, thanks for answering that question, Bob.
Yeah, thank you.
Nice.
Thanks for staying up late.
As always.
All right, last question, we're going to call it.
Hi, Bob. It's Wayne from Australia. How you going?
Hey, good, man.
Good. Just with regards to the portfolio builder, if your brokerage charges you a fee and you build that fee into the management fee, how much does that affect the portfolio?
A lot, actually. You can actually probably build the same portfolio twice. And matter of fact, I think I might be able to show you something on this platform that we have. I'm just trying to think if there's anything here that I could show you that I've already built out. But the fees add up. It depends on what percent. So are you actually an asset manager over there? Or?
Sorry, no, I just manage my own fund.
Okay, yeah. Yeah, so I mean, it's like anything, right? So they're cumulative, and not only they take money out and they take money away that you can. Oh, I know. Here's a good example. I just thought of something on this platform. So let me go over here. So I believe, yeah, so this is, let me get the S&P off here, and I'll make this full screen. But this is an example. This is only short term, but let's go. You'll see the cumulative effects. Now the green line actually has fees coming out. The blue line is a 60-40 strategy, 60% equities. I believe it's using like a SPY and a Vanguard bond fund, right? And the further out you go, look how drastic this gets. All of a sudden, at 78% return versus 115. That's the cumulative effect on putting fees into a strategy over long term. So it becomes very material over time.
Yeah, right. You can see it's quite a bit of difference there.
Yeah, there's a lot, and this is a great illustration because they're both. It's interesting. This is both passive, meaning they're just buy and hold strategies, but one has a fee coming out, and one doesn't. in fact, you can see that here on the trade log. This one that I chose doesn't have any fees, I believe. Let's see here. I'm just going to bring this one up. Now what you'll see is look at all the management fees coming out. So these are all the cumulative management fees over time. So that's what's dinging this account all. This is quarterly management fees coming out. So they accumulate a lot. So they're
That's a great example. You hear little percentages and you think it doesn't really matter that much, but like I guess it's a snowball effect over time, right?
Yeah, and I think if we look at this one, let me just let's go to edit portfolio and see what fees are in this thing. I think it's 1%, I believe. Okay, let's see here. Yeah, 1%. It's right here. 1% annual. Yeah, it doesn't seem like much, does it? But it adds up to very big dollars. And that's one of the things that I want to bring to the community is that when you start to do your own, manage your own money and you have a good process and things that Richard was talking about, where you have, ultimately, I want to bring in some classes and stuff and actually being able to run portfolio, multiple strategies within a household or within your own money that you're managing. And that's where it gets exciting because you can have an aggressive strategy. Maybe there's 20 or 30% of your money going on. And then you've got a bigger chunk of money that's more intermediate, that's got a longer term growth pattern that you want to do over time. And when you eliminate those fees, then, obviously there's a platform fee from our standpoint, but over a certain dollar amount, it becomes very immaterial in what the cost is to actually run your own money. And yeah, that's to me, that's really important. And there's a lot of the advisors, listen, we do a lot of business with these folks, and they do a lot of good things for their clients, not just the money management. Their fees pay for a lot of things. And we have one particular client I'm thinking about that does, for a set price, does everything: legal, state, planning, all kinds of other facilities for one fee. So it's not just the management fee, but it's based on the amount of money that you have with that manager. So everybody has a little different. So those folks are building their value on multiple levels approach, not just on the asset management side.
Bob, I just have one more question. You know how you were talking about putting people into groups? Would you be putting the international people into like a different group? Because when you're trading, like if you're in Australia and you're trading the US, you're trading US dollar versus the Australian dollar, so you've got the currency hedging problem. Would you be considering that when you put people into groups?
Yeah, I guess if we do have, we've got, I know not a lot, but we do have a number of clients down in Australia. And I know Singapore kind of in the same somewhat time zone. I used to live in Melbourne, so.
Okay.
Actually, we lived in Camberwell. Jay was about 8 years old then, I think.
I was almost 10. I had my
Were you
10th
10?
birthday
Okay.
there. Yeah, it was 81. Yeah, so
there
yeah.
you go. Yeah, that was a long time ago. That would be a consideration. I know we got people up late right now. We've got some European folks and people all over the planet, and it's what, late evening your time there now?
We're having breakfast 8:30 in the morning.
Right. It's the other way. That's right. That's right. So yeah.
This is great timing for us.
Yeah, when I was down there, I actually worked we had to work the U.S. markets. We opened an office in 1980, actually, and we were open basically virtually 24/6. We weren't open on Sunday, but we traded Hong Kong on Saturday mornings. And yeah, so we had offices all over the place: Sydney, Melbourne, Adelaide, Perth, Auckland, and Christchurch, and London, and New York and Chicago. And that was the operation that I helped start back in 1980. So I was a young man then. But yeah, we lived in Camberwell for a while. And before Jay and his mom and his sister came down, I was living in Adelaide for a while as well. I loved Adelaide, by the way.
Yeah. Good old-fashioned town.
So.
Okay, well, thank you very much for that. And it's great. The insights into all this is really, really good. You learned so much. Thanks for that.
Yeah, thank you. I know I keep saying one more, but one more.
Yeah, hello. It's Agat from Poland. I have a question. Does WaveTech actually, when it's predicting the price of certain stocks, does it take into consideration the after hours and pre-market trading as well?
It does get packed. That's a good question. It does get in there because those affect how that symbol is going to open, the next day. And, we've had the other effect over the years of trading ADRs, things that were, maybe trading in Asia or Europe or whatever. And you tend to, on some of the aftermarket hours, I guess this was old school because as we come into this year, everything's changed. Something like I saw that 60 or 70% of the returns over this rally has been actually in overnight trading.
Yeah.
So there's been a switch. It's interesting. And I've always been a late night. I've always done my commentary. I stay up late, usually wait for London to open. And that I always have had a great feel for how the U.S. markets were going to trade just by watching London. And now there's even what I call a pre-London crowd. Then there's the typical institutional folks that come in around a half hour, and then that first hour trading in London. And then by that time happens, the early New Yorkers are coming into play. And, so you've got, it's an interesting, interesting backdrop of what goes on the planet now, because everything is really, really connected. And now that we've also got a lot of people that haven't been able to leave, leave their homes. This has been
yes, exactly.
Yeah.
Well, honestly, because my time zone lets me to, let's say, be active in both markets. So I'm observing, like you said, the London time, and I'm waking up in the morning and I'm staying up till late. And basically I'm trading on both markets, and I do see some patterns in here, like you said.
Yeah. No, this my favorite time to scalp the E-minis back in, let's say, 08 and 9 was that half hour. There was a trade every night, a half hour before London, and it's still there. It's a interesting time of the day from a U.S. viewpoint,
Yeah.
So.
Yeah, exactly. Okay, thank you.
Yeah, thanks. Appreciate it. All right, let's call it quits. We're doing one of these tomorrow, another live cast. I will work hard on the videos tonight, trying to figure things out. I'll step away and try to get some clear head, and I'll put the those of you who follow on Twitter. We'll get the market grid numbers up here shortly for the futures, and we'll take a quick look at the futures here just for fun. They're up 650. Not a lot going on, but it's not collapsing. And a lot of times there's not a panic. It'll be interesting to see what I come up with tonight and see what what really were the effects and see what the models did and all that stuff. But one of the things we are going to, I mentioned this just in closing, one of the things that I want to look at, we're going to use basis on how many, we can't see what you do, but we can see that your activity inside the software. And we're going to start going for maybe a top 50 clicks. We're going to try to get a sense of where you folks are. I think what we'll do is a survey to all of you users out there to find out where you are, where you think your needs are. And ultimately, you know, we may have to break into maybe 3 different groups, and we may also only certain types of these things. We've been simultasking this on YouTube. We may ultimately just do private Zoom meetings, and then certain meetings will be simulcast. But there, you know, I think some of the conversation came out of today. I feel really good about. I appreciate Jason bringing that up. Some of the things he brought up, an amazing amount of work that some of you are doing. I know some other users that are on the call here today that have done an insane amount of work, and it's really. I just tell you, from a developer, from a guy that's been doing this a long time, it's really very interesting dealing with the crowd of folks and the customers that we have and the engagement and everything. I know Jay and I've talked a lot about that. So we appreciate all that a lot. So anyway, yeah, so tomorrow live stream, we'll do market stuff. And like I said, you know, just give us feedback. You can use the feedback button. Tell us what's going on so we can make sure we're filling the gaps, because sometimes this meeting today, I had a basic goal and I got through some of it. I never got to the allocation models other than general high-level thoughts on that. So I may just lock down, and in the future meetings just say this is going to be a theme and that's what we're going to do, and then that'll be easier to do on some of these meetings, and maybe we'll record them and post them later. We'll figure it out, whatever. We'll figure all this out. But thanks again for everybody showing up, and those are up late, up early, wherever you are. We appreciate it. So thanks again, folks.
Thanks, Bob. Have a good evening.
Good evening.
Thanks, Mr. Kendall.
You're welcome.